Good morning, traders. Good morning. Good morning. We hope all is doing well and sensible here. 15th of June, we are midway into the sixth month of 2026. Before we get started here with the opening bell, remember, traders, the information we discuss is opinion and should not be construed as advice in any way. We're ready to get going on the charts. Interesting one here this morning. The dollar index fell towards the 99.5 point area from a very, very interesting high. It seems like the US-Iran peace agreement reduced the demand for the safe haven assets, and those falling oil prices, seem to lower the inflation concerns as well. I mean, look at this oil price over here. We've come down from a massive $100 per barrel. We went down to 92, 94, scaled it to 88, and we're currently sitting at 82, 83. Now, from a daily perspective, we've already established a new lower low. And this feeds back into the narrative we had mentioned that there's a lot of exhaustion in the oil price that we saw months ago. It was just a matter of everyone being involved in the intricate movements, thinking that from that support, we're going to be pushing up and creating a new higher high. But, we saw the exhaustion already here in March. That was the 6th of March, to be specific. This is where the exhaustion kicked in. And here we see the divergence. This is just a move from there that is you can find over here. It is much lower than that one there. All right. So the divergence has kicked in. Investors moved into riskier assets like stocks and commodities. And so we're seeing, assets like BTC. We're seeing the stock indices like your US 30 and your S&P 500. They've pushed up a little bit here this morning because of what is happening globally. But guys, we must also mention the following, that obviously this is the fractional movement here. This is not to say that we should be selling oil all the way down now. We have yet to learn what will come of the peace deal. Yes, there are stipulations, there are line items within the peace agreement, but again, it's politics, and from a economic standpoint, it does rely heavily on many times the personalities of the leaders, the cultures, and so forth. So if the peace agreement stands and it is sustainable, and both all parties involved honors what it stands for, yes, then that's a different discussion. But we don't know yet, because this is the first week where we're seeing something that's more solidified, and the market has reacted to that. So inflation concerns have come down. This plays back now to the narrative of the interest rate discussions, because if the inflation didn't come down, or the oil price doesn't come down and it goes up, inflation goes up too. That means hikes are expected. But even although that was the case, if it continues to go this way with that lower low, as you can see here, let me just zoom out so you can see again. Let me go back to the oil price. Then we may get those cuts now. All right, we may get the cuts. So what do we do in the meantime? Please be very careful today, because what you see this morning, particularly on the indices, all right, many traders do expect this. When they look at it, they're going to start buying. But technically, we are very clear of the following, that a lot of movement like this that really goes nowhere generally does more so 80% of the time. All right. What that does is it actually has a correction that's waiting. And that's important to understand. There's a correction. And so we are looking at that fractional movement there today and possibly tomorrow. Let's see if a correction actually comes through. Because it happened before. Look at this. Look at the pattern right there. A bit of a correction. Right there, a bit of a correction. So we're not saying that it's going to be a massive one, but there has to be some form of pullback here. All right. So be very careful if you're just going in for longs. From an educational standpoint, we see it, we teach it. We always mention to the guys, be very careful. This is a very, very large impulse. If you look at it from an 8-hour perspective, there's absolutely no support here. When I say no support, I'm referring to any red opposing force. All right, that's what Ash means there. All right, there's no opposing force in this impulse. And so that might just happen then this week. So be very careful if you're trying to buy the highs now. Okay, and that same for S&P 500. Exactly the same technical setup there. It's got a very large impulse there, and we're going to wait and see what then happens. But it's very clear and cut. The dollar a little bit weaker this morning. You can track that on the JPY as well. You can look at the AUD USD as well. You see that we've been pushing up here this morning. Look at that. That's the AUD USD. Euro USD, we've been pushing up as well. The gold price is pushed up as well. And so we can see it. There's a filtering process that's been happening this week here, or at least the start of this week, with a much weaker dollar this morning. Just be careful of corrections, all right? But if that oil price continues to move to the downside, it's going to be good for us. It's going to be very, 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 very good for us. Lastly here, those U.S. Treasury yields, the yield fell to 4.42%, lowest level since May. And those lower oil prices obviously reduced the inflation fears. Investors increased bond buying as expectations for aggressive rate hikes, and that eased. All right. So the impact then we're seeing on that U.S. Treasury yield is that lower yields are supportive for stocks, especially technology and growth companies. Those lower yields is going to be weighing heavily on the US dollar. A lot of pressure there. So watch out for the pullbacks on the gaps starting out in the week as well. Be careful of those. If you sell now and you place a stop loss over there, it might just hit a stop loss, go up, and then come down again. That's the technical evidence that we see happen over and over again. All right, so don't be fooled by just because it looks bearish, it's going to continue being bearish for the whole day. Please, guys, do not be fooled about that. All right, traders, Sandil, I see you there. Good morning. Good morning. I hope you're doing well here. All right. So, guys, easy Monday here, easy Monday. Watch out for, if the dollar does pull back with a little bit of strength. But we did see a tumble here this morning early because of that peace deal. Again, this is fractional movement. It's really intraday speculation that is taking place here today. Not that it doesn't happen on a Wednesday or Thursday, but I'm emphasizing that. Let me actually say I'm overemphasizing that today we're really digging into the fractional movement there, the fractional movement. All right. Why? Because the peace deal is there. We see the effect and the impact. However, we need a little bit more time to see if it's sustainable. We need to see all parties actually sink into the realization. It's like a house needs foundation at times to be, the foundation needs to set in. Does this peace deal have the ability to sink in and give us a longer lasting effect where we can speculate a little bit more accurately with a higher probable outcome? All right. Yes, peace deal. I see the hashtag peace deal. That is the breaking, or at least the story in the opening bell here this morning. All right. But traders, have a fantastic one. A bit of a short week here for us in South Africa. We have Youth Day tomorrow, 16th of June. So we will not be having an opening bell, public holiday there. But we'll be celebrating that as a nation. But then on Wednesday, we back. So make sure that you stay tuned for the notifications. With that being said, subscribe, turn on the bell, and then obviously wait for the notes to come through on, Wednesday, because that's when we'll be returning for an update on the market. But looking good, beautiful morning. Obviously, we're in winter. And we want to try and see how the rest of the day goes. If you've not opened that account with us, meaning you will not even be able to be part of the family, even on YouTube or Facebook, visit www.tdmarkets.com. You can also email us at care@tdmarkets.com. So once that account is open, obviously it is an easier way for you to stay within the ecosystem, because now your account is there, you are subscribed, you get the notes, and when they do come through, you're able to take some action. All right. But that's it from me this morning here. I'm Ashley Reeve. I know T will be with you guys on Wednesday. Have a fantastic day, guys. We'll see you guys on Wednesday. Ashley Reeve here. Ciao, ciao.